Thank you to BMO Global Asset Management for sponsoring today's video. I'll share one of the ways to invest globally and in the easiest way possible for as little as $10. Now, if you ever want to invest globally in companies like Nintendo or Mercedes-Benz, but the thought of having to figure that out in your TFSA, your RRSP, your non-registered accounts, or the thought of having to exchange your Canadian dollars to euro or to yen just made it too complicated. Now you can buy a slice of a company like Nintendo, Mercedes-Benz, but instead of buying it directly from that country, you can buy it with Canadian dollars with a click of a button. The ultimate guide to CDRs. In today's video, I want to talk about what are CDRs, the key pros and cons. The 9 things you absolutely need to know before you start investing, including why you wouldn't invest in CDRs. Also touch a little bit on taxes and how to start with as little as $10 and invest globally. By the end of this video, you will have all the information needed to decide if this investment approach is right for you. Hey, I'm Tracy, an ex-engineer turned full-time business owner and a part-time investor in Canada. And I educate Canadian DIY investors to make multiple streams of income and make money while you sleep. What are CDRs? Gone are the days of excessively worrying about currency fluctuations within your investments and the hassles of exchanging your Canadian dollar to another currency. BMO is removing the barriers of investing globally with the launch of CDRs from a number of countries like Germany, Japan, and Switzerland. Personally, I'm so excited to invest in Japanese companies like Nintendo in my kids' education fund in Canadian dollars with as little as $10. My kids play Nintendo so often and spend so much money. I might as well invest in them. And it's a great way for my kids and I to connect together about gaming and investing together. Why buy them? Number 1, it's accessible and affordable. First, CDRs allow investors to gain exposure to fractional ownership of foreign companies. It's a good practice to diversify your investments geographically. A lot of Canadians invest too much money in Canadian stocks, which are heavily concentrated in utilities, banks, and energy. I'm guilty of this too. So with these CDRs, it's allowing me to diversify more easily for as low as $10 Canadian. They offer Canadian investors a way to diversify their portfolio, mitigating currency fluctuations and currency exchange fees. CDRs are currency hedge, meaning the fluctuation of the Canadian dollar as compared to other foreign currencies is mitigated. You can buy foreign companies in Canadian dollars. You save money by not having to increase currency transaction fees. It's very common to get dinged with foreign transaction fees, 1 to 2% both ways. This can really eat into your profits. Number 3, saves you time rather than worrying about changing your money from one to another, and that takes time. For example, to buy Mercedes-Benz, you need euros. To buy Nintendo, you need yen. But now you don't have to worry about exchanging your money. Bonus, tracking your portfolio returns becomes much easier when it's all in Canadian. Now, before I touch on taxes and how to invest with as little as $10, I need to talk about the 9 things you absolutely need to know about investing in CDRs and why some of you wouldn't want to invest in them. Why the low investment price? The reason for the starting price of $10 is because each CDR is similar to owning a fractional share of a company's stock. If you want to know how much of a percentage of shares you own, you can look at the CDR ratio. For example, if the CDR ratio is 0.2, it means you own 20% of a share. So it would take 5 to equal to 1 whole share. It's a bit like splitting a piece of pizza. The ratio tells you how many slices, aka CDRs, you need to have the whole pizza, aka 1 share. CDRs versus foreign stocks. Holding CDRs is equivalent to holding the underlying stock. CDR investors may receive dividends and have voting rights. ETF versus CDR. Say you're a big ETF, but you wanted a heavier concentration in a particular stock. You would have to filter out each ETF to find an ETF that has that particular bigger holding, which is a pain. If you really want to add exposure to a single company really super fast, you can buy CDR instead. And that's what I'm doing. How much will you pay? While there are no ongoing management fees, BMO earns revenue for managing the currency hedge on the CDR. This is capped at 0.6% per year. Did you know you pay 1 to 1.5% just for converting your money, which is way more expensive and time consuming? When to not buy a CDR? If you're planning to hold foreign companies for several decades and in large amounts, the general consensus from financial experts is to not hedge the currency exposure, meaning it's just better to buy the foreign company in their currency. That's because the currency fluctuations should even out over a period of several decades. However, you're just getting started like I am, investing globally at a fraction of a price. It's a great way to start. Is it easy to sell and buy? Because these CDRs track large cap popular stocks with high trading volume, liquidity isn't an issue, meaning it won't take you long for you to buy or sell your CDRs linked to those foreign companies. How about dividends? Dividends are paid to you in Canadian dollars. You will still receive dividends from the CDRs that are linked to dividend-paying foreign companies. So how do you actually buy CDRs? Well, I'm going to show you. You can do this through your investment accounts like your TFSA, your RRSP, your RESP, even your non-registered accounts. I'm going to put in the ticker symbol that's linked to Nintendo shares and buy the CDRs. Ticker symbol is NTDO. I'm going to hit market price and click buy. Now, how will you get taxed? The withholding tax and dividends will depend on the country you're investing in. Dividends will get taxed as regular income if it's in a non-registered account. A tax credit can be applied against your Canadian taxes for some or all of the foreign withholding taxes. Now, if you're wondering what's available to invest globally, here's a list of CDRs that's available at this moment. Please make sure to keep an eye out, as new markets will be coming. If you have any questions about CDRs, comment below. I'd be happy to answer them, and I read every comment.